Welcome back. My name is Caleb Preston with Alaska Financial Company, and you're watching the third and final video about how you can earn 7% without touching your principal. In this video, I'm going to show you exactly how you can start earning 7% today. Now, we started out by uncovering the current retirement crisis. This crisis is being caused by a combination of stock market volatility, low interest rates, and longer life expectancy for most investors. In our second video, we reviewed how retirees are now using alternative investments, such as real estate, to diversify risk and increase overall portfolio returns. And we also reviewed the 6 due diligence criteria you can use to lower risk when researching a new alternative investment. Now, I'm going to show you exactly how AFC has been able to pay a fixed 7% return with no losses and no fees since January of 2009. Does that sound too good to be true? Well, it's not. I'm going to now open the vault door and share exactly what our investment strategy is and how you too can start earning these kinds of returns in your portfolio. Now please pay close attention because I guarantee you're going to find this very, very interesting. We can pay a fixed 7% return, and in some cases even higher, because we buy private real estate notes for cash at a discount. Now I want to explain what this looks like by telling you a quick story. Meet Tom. He's self-employed and wants to buy a home for $200,000. However, because he's self-employed, the banks won't lend to him. Meet Julie, the property owner. She's currently retiring and moving out of state and would like a little additional income for retirement. Since Julie wants income and Tom wants to buy a property, they decide to seller finance the property. So, Julie sells the property to Tom for $200,000. In exchange, Tom pays her a $50,000 cash down payment, and they write up a new promissory note for the difference. This note is an IOU in which Tom owes Julie $150,000 at 7% interest. That means that he's required to pay her $1,350 a month for 15 years in order to pay her off. In addition, there's also a deed of trust that's recorded against the property, which means that Julie can foreclose and take back the property if Tom doesn't make his payments. It's a win-win. Julie's now making over $1,300 a month additional income, and Tom gets to enjoy his new home. All right, let's fast forward 3 years later. At this time, Julie now wants to buy a home in Arizona and would like a lump sum of cash. Meanwhile, Tom is enjoying the property and has paid down his loan balance to $131,000. He's also done some improvements in the property, which is now worth about $220,000. Because Julie's name is on public record as the holder of the note, she receives a postcard from a note broker. Now, there's hundreds of note brokers nationwide, and my family actually got into the business by starting a note brokerage in Alaska back in the late 80s. So, Julie calls the broker to see how much her note is worth. The broker gets all the details of the note, and since he's already an approved note broker with Alaska Financial, he knows this is a note that AFC would like to buy. So, this broker calls our quoting team and asks how much we'd be willing to pay to buy that real estate note. We offer him $112,000 cash, and the broker turns around and offers Julie $105,000. Julie accepts his offer and receives a lump sum of $105,000 cash. The broker makes $7,000, and AFC just purchased a note with a projected return of 10%. Now, the reason that we can earn 10% is because we bought that future cash flow stream today at a discount. So, Alaska Financial Company is a pool of performing real estate notes that we manage on behalf of our investors. As of the end of first quarter 2014, we had 209 first position real estate notes in our portfolio for a total of a little over $31 million in total assets. Now, those assets were backed by over $74 million of real estate value. And we had an over 95% performance rate, which means over 95% of our portfolio was paying on time. You see, what we've done is we've developed a way for investors to enjoy the security and the return of note investing without the hassles or the risks of owning notes directly. We have purchased over 2,700 notes since 1989 and put our expertise to work for you so you can simply enjoy the income. Now, we currently have 4 open secured note offerings. Each series is backed by the same pool of performing real estate notes, which we just looked at, and is a 5-year investment. Now, feel free to pause the video here if you'd like to take a closer examination of each one of these different series. You'll see that each one has a little different minimum investment amount, yield range, and the lock-in period, which is how long you have to wait before you can pull your funds out. So you don't have to wait the whole 5 years. You can pull them out early depending on which lock-in period applies to your note. Also, we don't charge any fees because our model is to pay you 7% and then go buy notes that earn 10 to 12%. And what we do is we keep what's left over after you get paid each quarter. So our interests are aligned with each other. And AFC is a great fit for IRAs and can be invested in practically with all types of retirement accounts. Now let me just say that AFC is not for everyone. Let's look now at who is a good fit for AFC. Well, AFC is likely for you if you're tired of stock market volatility, low yields, and fees eating away at your portfolio. It's probably for you if you want a source of stable real estate secured returns. And finally, it's for you if you qualify as an accredited investor. Now, there's several ways that you can qualify as an accredited investor. The first is if you have a $1 million or greater net worth, excluding the value or the equity in your primary residence. The second way you can qualify is if you make over $200,000 a year adjusted gross income or $300,000 joint with your spouse. So per the SEC's rules, only accredited investors may invest in the types of funds like Alaska Financial Company. So you have to be accredited in order to invest. And we do need to verify your status as an accredited investor at the time of investment. Now, let's look at who's not a good fit for AFC. Well, AFC is not for you if you're looking for a highly liquid investment. It's also not for you if you want a short-term place to park money. It's not for you if you can't afford to take a little risk, or if you're not an accredited investor. So if AFC is for you, we'd love to talk with you further. The next step is to schedule a 30-minute phone call where we can address your questions and help determine if we're a good fit for each other. If we are, you will then be provided with a memorandum and an opportunity to become an investor of Alaska Financial Company. So, to set that meeting, click on the button below. There should be a big button that says schedule a call on this page. Go ahead and click that button, put in your information, and we'll go ahead and set a time to talk further. Or if you'd like, you can call us directly at 907-783-3253 and set a call that way. We look forward to speaking with you soon. Well, thank you for watching. I trust this series was highly informative and worth every minute of your time. If you're interested or have unanswered questions, the worst thing you can do is to leave those questions unanswered. So please, schedule your call today and let's discuss how you can start earning 7% without touching your principal. Have a great day.